Hi, it's Mike Maloney with Jeff Clark once again. Jeff, how are you doing?
I'm doing great, Mike. It's great to be back with you. Lots of fun stuff to talk about in the markets today.
Okay.
So let's just jump right in. Here's one article I really want to bring to your attention. It was written by Ronan Manley, sorry, and it's called "The Twilight Zone as ETF Provider Warns Buying Silver Will Harm Hedge Funds and Large Banks." This is pretty crazy. We've talked about the SLV changes in their prospectus, but this is the SIVR ETF, which also, by the way, stores its bullion in London right with SLV. But the change that they made to their prospectus, which, by the way, was on the same day as SLV changed their prospectus, which I find very interesting. But here's what they said. As of the date of this prospectus, an online campaign intended to harm hedge funds and large banks is encouraging retail investors to purchase silver and shares of silver ETPs, exchange traded products, which includes ETFs, to intentionally increase prices. This activity may result in temporarily high prices of silver. I'm sorry, Mike. This is just hysterical. These guys actually put in their prospectus that they want to protect the hedge funds, and that oh my gosh, the price of silver may temporarily rise. I mean,
Right,
who
and
are
that they
these
want to
guys?
prevent the price from rising. Yeah, amazing.
Exactly.
Right.
This just amazing to me, Mike.
First, I want to give a big shout out to Ronan Manley because he does some great research and some he writes some great articles. So great job, Ronan. And yeah, we were talking about this yesterday, and we've been talking about it for the past couple of weeks here. The changes in the fund's prospectuses, they're putting out warnings. Basically, SLV was putting out a warning that may have to suspend or restrict the issuance of baskets. In other words, the being able to issue more shares. So they're both of these funds, these silver funds, are basically stating, but this the Aberdeen Standard Physical Silver Shares, that trust, which is also using J.P. Morgan as their metals custodian, to say that they're basically protecting the hedge funds and the large banks. And what they're afraid of is that the retail investors are purchasing too much silver through ETPs, exchange traded products, to intentionally increase prices. This is insane that they would even create and it just shows you that that Wall Street, there's a lot of like evil stuff that is intentionally deceptive. They've created a deceptive product here. And we'll be talking a lot more about this tomorrow when we're going to go over a bunch of charts and sort of dissect some of what is going on with where the silver is, what the funds are that are flowing into and out of silver, transparent silver holdings, and what may happen in the future. But if these funds didn't exist, I'll bet the price of silver would be way over $30 now, probably on its way to 50. The very fact that you can short these funds, I don't know the short position right off the top of my head on these funds, but when somebody shorts a stock, they borrow a share and they sell it to somebody. So you've got the original owner of the ounce of silver in SLV, and then you've got another owner of the same ounce of silver. So that second ounce, basically, that second share, is just a paper ounce of silver that doesn't really exist because it's two people owning the same ounce, both thinking they have an ounce that's theirs. So when they do that, they're neutralizing the inflows of all of that cash that's coming in. So the price doesn't necessarily have to rise because they're not selling more real physical silver. If you take physical delivery off of the commodities exchanges, where they start actually running out of silver. But that didn't happen. with this. If yeah. Anyway, this is just totally insane. That it's like you want to build a car, or you want to build a house, and you're selling houses. You're a real estate developer. And if the price of houses goes up, you're afraid of that. Oh, I'm going to make too much cash on this transaction. It's not money. Too much cash on this transaction. We got to stop that. We got to have lower prices. Well, this shows the true colors of these funds. They aren't made for your benefit if you're investing in them. They're made for, there's other reasons that exist behind these funds, ulterior moties. So anyway, what's your thought on it?
Yeah, it really shows their true colors. And the bizarre thing with me, why I was laughing, is because they actually put this in their prospectus. Your prospectus is like your bylaws. You don't put this kind of stuff in your prospectus. If you really are concerned, this would be more like, a press release or an announcement. But even there, you're spot on. And Ronan made this point. This shows their true colors. And so this is just, it's bizarre to me. And oh my gosh, the silver price might go up because people are more interested in it.
Well, remember, these funds have armies of some of the best attorneys and CPAs and so on in the world. And they don't release any of these statements lightly. So they've gone over this and over this and over this. And basically, this is a warning that if people buy too much silver, this fund could fail to track the price of silver, and you might lose. They are protecting themselves from lawsuits in the future with these statements. That's what they're doing. So they are showing what the true function of these funds is. And it's not what people think it is.
Right.
This is like I keep on telling people, and I told people in my book, the ETFs are a derivative of the real thing, and you're buying a share in a trust. You're not buying the gold and silver. You are, you're one of the creditors if there was a bankruptcy of one of these funds, and so you stand in line, and there's other creditors way ahead of you, and then you get what's left.
The bylaws are there to protect the hedge funds and protect the fund itself, not the retail investor like us. Yeah. So, and as the crisis gets, really picks up steam, these kind of problems are going to come more to the surface. So you really have to steer clear of, a paper product like this. So, well, Mike, let's jump on to the next article here. And this one is, Joe Biden promises stimulus will bring the U.S. economy roaring back. So this article goes into basically what Joe Biden is saying. He's basically justifying that more spending is needed to bring the U.S. economy roaring back. So, Mike, what's your take? Is government spending really the answer to bringing the economy roaring back?
Does the government actually create anything that they can spend? Do they create the dollars? Do they create the wealth? Wealth is created by people creating products and services for one another, and then transactions happening. Government doesn't do that. Government takes wealth from one sector or another. They have to tax somebody, or they tax all of us through inflation, through creating currency. And this is another politician that just doesn't understand economics. And he doesn't understand. He says that we've got to do all this spending. What he's really saying is we have to do all of this theft and transfer wealth from one group of people to another, and that'll get the economy going. And whenever the stock market goes up, people think, oh, the economy is fine because the stock market is going up. The stock market isn't the economy. It should be connected with the economy, but it's not. If you look at all the fundamentals, the valuations and everything on the stock market, it's taken on a completely separate life. So the financial economy is completely separate from the Main Street economy these days. And people think the Main Street economy must be all right if the financial economy is doing it. Well, if the financial economy is zooming ahead of the real economy, what is the real economy? That's all the goods and services that are being bought and sold. Those are being made by the companies that are listed in the stock market. And if the stock market's blown into this huge bubble, which has to pop sometime or another, you can't continue inflating something to where its price earnings ratios and all the real measurements of value are completely out of balance with the reality of how much of those goods and services are being sold on Main Street. If people are out of jobs, they can't afford to buy the latest iPhone and such. And so they're going to do a bunch of spending. Some of it will flow into inflation, because when they get when they get cash into the hands of especially the poor, I've watched a lot of the poor, and I deal with them and so on. And one thing that I've noticed is it doesn't seem to be how much they make that makes them poor. It's how they spend that makes them poor. One time, I gave a very trusted, loyal employee a parting gift. We parted at the end of the year, and so the beginning of the following year, I gave him the maximum cash allowed gift that I could give him. It was about $15,000. It took him 1 day to get rid of it. 1 day. It was supposed to last for like a long time. This was a minimum wage guy. And so when they do spending and send checks out to everybody, some of that is going to find its way into retail inflation. But when they do things like the Fed's open market operations, where it's based on purchasing treasuries from the primary dealers and such, that goes into inflation of the stock market. And so if Biden wants the economy to just come roaring ahead, what they'll do is they'll inflate the stock market. If they want to do something that's very long term and builds, there is no good answer anymore. They've left us with a bunch of very, very bad choices.
That's a good point.
And any one of these choices, if it's through creation of currency and deficit spending, then it's through fraud and theft. And so all I see is that when they do all of this spending, it's going to be hugely good for eventually for precious metals and cryptos. And right now the news is cryptos, but the cash has to flow to somewhere, and the more people that start getting scared of the consequences of what they're doing, that's when you're going to see the fireworks really start in the precious metals sector.
Yes, the fireworks are ahead, that's for sure. So, well, on to tweet of the day, Mike. This is from Luke Groman. He says the, quote, U.S. economy with Chinese characteristics, end quote, we began writing about 9 to 10 months ago continues. And he references an article we have here from the Wall Street Journal that basically the Kansas City Fed president is saying that so far real estate troubles have been contained by government aid. All this today, Mike, I just can't help it. But basically, the point he's trying to make is that the U.S. is becoming more like China, where it's more state-controlled or government-controlled.
Yes.
So
it is definitely becoming much more of a command economy. And what we see throughout history is that command economies don't work. If they did, Venezuela would be a very wealthy country right now. A major oil producer where somebody that's really smart has taken control of the economy and is running everything. They should be the wealthiest country on the planet at this moment. And they're not. And it's because it's a top-down economy where the government is trying to figure out how to run everything. They nationalized thousands and thousands and thousands of businesses, and there's always unintended consequences of the government setting a price on something or determining how much of something there should be, including interest rates and the currency supply. And so we are becoming much more like China. And now China's economy has been successful at doing some of this, but when you go to China, they don't have, it's much, much more capitalistic than we are. when it comes to the small business. Small business, it's the wild, wild west. I was really impressed when I went there, and that's the reason it's booming. The Chinese government has kept control of what is called the commanding heights, so power and things like that. But when it comes to small business, it really is much more capitalist than the United States, with less hurdles in regulation and so on. There's a lot of payola that happens there. You've got somebody that you need a license from, and you pay them for it. And so you do get your licenses, and everything happens very fast. You look at, I've owned Teslas for a long time, and you look at what happened with Tesla when they went to create Tesla Shanghai. From breaking ground, it was 11 months, and they actually had some cars being produced. They built this gigafactory, this giant, there was nothing there. There are now major roads and railways coming into this plant to be able to bring all the stuff and then take out the finished cars. So they bring in raw materials, finished cars come off of this thing. They're doing more than 5,000 cars a month now, a week, out of this plant. And they actually had it from the first shovel of dirt to cars come. This would have taken 5 years in the United States, not 11 months. And so there are aspects of the Chinese economy that are the wild, wild west. But when it comes to the manipulation of the currency supply, the manipulation of exchange rates, when that was the Fed Governor Bullard, was that who made the statement about real estate?
Esther George, yes. Kansas City Fed President Esther George.
Kansas City Fed President saying that the government, they've done a really good job of containing the government has contained the bubble. Well, you know what? That's what they were saying just before the real estate bubble popped in 2000, that there is no bubble, there's no asset bubbles going on, don't worry about it. This is another person that doesn't know anything about fundamental economics. They know the micro. They don't really know the macro that well.
Yeah, it's very interesting because I was actually in China on a mining tour about, 10 years ago or so. And it was my observation that China is actually more capitalistic than the U.S. in many ways. So, yes. Well, Mike, on to chart of the day. And this is from Der Gold Report, Silver Squeeze. Here we go again. The Crimex, and he's referring to the COMEX, of course, open the doors for another paper push lower. And this chart shows that as soon as the U.S. market opened this morning, that the price of gold got pushed down pretty significantly. So, Mike, what do you make of that?
I think it's wonderful that he labeled it the Crimex instead of the COMEX, because this has been going on for years. However, when something is suppressed, this is your opportunity, and it's still suppressed. They've been slowly losing control over it, but this is going to accelerate one day, and this time it's going to come with the big crisis. Whenever the big crisis happens, and as we've seen with these funds, these ETPs and ETFs, when too many people rush in and want to buy this product that they're supposedly selling that you would think that they would want high prices on, the whole thing can break. And when it breaks, you're going to see just astronomical prices, and gold and silver will be unaffordium and unobtainium.
Yes, very good. Here's a viewer comment for you, Mike. This is from Ryan. Don't fret over lagging precious metals prices relative to the bubbles. There is a huge educational gap that has to be closed. That education is in progress and will accelerate soon. We are just early. Keep quietly stacking. Well, that's some good advice, huh, Mike?
Yes. This is a road I started on actually in about 2001, 2002. I started telling people just personally about it. And then 2005, I made it my profession. But what's happening right now, this Wall Street Bets silver push is introducing so many new people to this story. And it's going to, I believe that unless they can get a whole lot more capital right now to take silver off of the commodities exchanges, not the ETFs, but to take 1,000-ounce bars out of circulation, basically. You don't want anybody being able to short them. You don't want any accounting hanky-panky to be able to go on. So you want your 1,000-ounce bars, or you buy 100-ounce bars or some other form where they're melting down the 1,000-ounce bars and creating something out of it. Either way, if you buy silver and you take delivery or put it in a private storage account that's not in an exchange vault, you're going to be creating the shortage. And then the day that comes that there is a crisis and suddenly everybody rushes for the safe havens, that is when you're going to see, and the greater the shortage is during that crisis, the higher the price is going to go. And so for me, I've just done this long term, knowing that this is something that will happen. That's my opinion, that eventually we are going to see this crisis, and gold and silver will once again, people will rush toward it as a safe haven. It's absolutely destined to be. The only question is when. And what we can see is with this closing that education gap. You know, one of the things that I said in the new book that you and I are writing, that is nowhere near done yet because of me, is that one day everybody will know the difference between currency and money. And when that day comes, the opportunity that is the great gold and silver rush of the 21st century will be over with. That will be part of history. And so you want to get in before everybody gets educated about this.
Right. There's the reason for the saying, there's no rush like a gold rush. And of course, that'll apply to silver as well. So it's happened before, and we're convinced it's going to happen again. So, well, Mike, we'll close out this video by letting you read the meme of the day. But before we do that, remember, you can still download Mike's book for free. We'll put the link below here. If you've not read his book and don't understand the big picture of what he's really talking about, you can download it for free and check it out there. So, well, Mike, tell us about the meme of the day.
Okay, Jeff, this one is pretty simple, but when we talked about the president's plan for all of this spending, I had mentioned that the government doesn't produce anything. All they can do is transfer wealth, and this meme just hammers that home. You've got amateur looters, and you've got the professional looters.
Right.
So, thanks again, Jeff, for the great conversation.
Yeah, this was an enjoyable video, Mike, so I had some fun with you. So thank you, and we'll see you tomorrow.
Okay, see you later, Jeff.